Hello traders and welcome to another video review. Today is Tuesday, the 16th of the February 2021. Let's take a look at the Forex calendar and then of course we will do some technical analysis. So what is going on here? We got the monetary policy meeting minutes that were released at 1:30 a.m. from Australia. So we definitely take a look on the Australian dollar today. And during the London session, we got the EW survey. As you can see, we got the survey from the whole Eurozone. We got the survey from Germany. We got data from the Eurozone in form of the GDP and the employment trend. So some kind of a data, nice data. Bunch of data from the Eurozone and the Germany, 11 o'clock, worth to keep an eye on it. And that's it. That's everything during the London session. New York session doesn't look impressive as well. We don't have any important event scheduled for release during the New York session. At 2:30, we got New York Fed Empire State Manufacturing Index, and that's everything because there are some leading indicators 3:30 from UK and the leading index from Australia as well. So nothing interesting here. So because we got the monetary policy meeting minutes, let's take a look on the Australian dollar, then New Zealand dollar, then we will take a look on the euro dollar as well. And that's for sure, but then we see what to do. So let's take a look at the Australian dollar first. What is going on here? We got some bounce, right? We got a bounce after the 5 waves had been done. We got a bounce towards this high from the 6th of the January, 7,822. So far, the market broke above this short-term trend line, fine. But recently, we just hit this high, 7,806, and as you can see, we got this upper shadow here. It doesn't look good for the bulls right now, because the candle is now being red, with the long upper shadow close to the recent swing high. So it might suggest that there are some sellers here in this area of 7,806 pips, and we might go a little bit lower before the uptrend will continue. But the bounce from the lows of 7,566 was very nice. Nevertheless, we didn't hit the 7,822, and there is no new high made yet. So please keep an eye especially on this level, 7,757, and of course on the technical support. Let me just put it on the chart, around 7,719 pips. So those are the key levels. If 7,719 is violated, then 7,679 is likely the next target. So that's the Australian dollar. New Zealand dollar, kind of a different situation here. We have a breakout from the triangle, as you can see, supposed to be a triangle, but there is no follow through, and we are still fighting with 7,244 pips, the technical resistance. It had been violated, as you can see, but there is no close above this level. So we are fighting with this. We keep fighting with this level, but only if there is a close of any candle above this level, then we can say that okay, something is going on from the bullish side, and we might hit 7,313 again. This is not like a impressive breakout from this triangle, so I guess we might just say that the consolidation in this zone 7,175. 7,244 is continued with the pressure on the bulls from the level of technical resistance 7,240. We will see what will be the result of this pressure in the nearest future. And the Eurozone data will influence the euro dollar. And I would like to show you something interesting because I think this might put some light on the current situation. We have hit 50% Fibonacci retracement of this ABC wave down. Okay, so 1.2151 has been hit. As you can see, we got first upper shadow, second upper shadow, we got the bounce, right? Lower shadow, we got another upper shadow, and today we got another upper shadow. So we have 4 upper shadows, 1 lower shadow. So this 4-1 for the bears for now. So the bears are preventing bulls to go higher than 1.2151 towards 61%, for example, like 1.2198. And it looks like this market might be pulling back from this level. Of course, we will mark the intraday technical support 1.2068. That's the key one, because if it's broken, then the market will go towards 1.2013, and then most likely we will go towards these 2 levels here. Let me put them on the chart. Those are below that Fibonacci of the whole move up. Again, from the other side, from the whole move up. So right now, please keep an eye on the current development here. Any violation of the 1.2151 with the daily candle close above this level is bullish. But if there is no such a behavior from the market participants, then we can assume that there is something going on here, something dodgy, and we most likely will go down, right? The other thing is, as you can see, that's the daily time frame chart, and this move down is completed, as we spoke about it. This one apparently doesn't have a strength to go above 50 or 61% of the Fibonacci retracement, or above 1.22, because that's the technical resistance, right? So we might continue this move down, because that could be the first leg of the zigzag. That would be a connector, and then there will be second leg of the zigzag. So we will have a complex correction, not a simple one ABC, but the complex W, X, and missing wave Y. Okay, if we take a look at the RSI, we can see it's on the 52 points level, so it's barely moving up. And since this consolidation here and the bearish pressure is being moving basically flat, so there is no bullish pressure, there is no momentum up, and it looks like the bears are defending the 50% of the Fibonacci retracement, 1.2151. So please keep an eye on this current developments, because the data from the Eurozone and from the Germany might trigger some interesting moves today on the euro. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I'll see you guys tomorrow. Bye bye.